Welcome to September edition of Bridge to India's monthly update on renewable power tenders and policies. We start with the tender updates. Total utility-scale solar issuance in September stood at 3,538 megawatt, up by 80% compared to August. Auction saw a smaller increase of 15% at 2,014 megawatt. September saw 12 new utility-scale tenders across multiple states. 4 of these tenders, aggregating 3,404 megawatt, were issued in project development mode, while 8 aggregating to 134 megawatt were issued in EPC mode. Results were announced for 3 project development tenders, 1 EPC tender, and 2 EPC sub-tenders in this month. There were 7 new rooftop tenders with an aggregate capacity of 115 megawatt issued in this month. 3 EPC sub-tenders were also issued. One was a storage sub-tender with a capacity of 200 megawatt, 400 megawatt hour, and 2 solar EPC sub-tenders with a total capacity of 69 megawatt. Bid submission deadlines were extended for 26 tenders. Tender designs continue to evolve, with hybrid tenders gaining traction due to growing demand for firmer green power to manage peak load demands and efficient utilization of transmission infrastructure. Share of hybrid tenders has increased steadily from 5% of tender issuance and 4% of allocation in 2018, when the first hybrid tender was announced, to 16% and 23% respectively in 2022. Hybrid projects account for 15% of total pipeline capacity at 10.5 gigawatt. We expect their share to continue to grow further in the coming years. Now let us look at details of a few key project development tenders issued in this month. SECI has issued a pan-India ISTS tender to procure 2,250 megawatt round-the-clock renewable power bundled with conventional power. The RFS terms are largely in line with the revised guidelines for RTC tenders issued earlier this year. Share of renewable power should be at least 51% of total generation. The plants are required to have an annual availability of 90%, monthly availability of 90% in at least 11 months in a year, as well as peak hour availability of 90% for 4 hours every day. The peak hours will be specified by the RLDCs of the buying entities. Bidders are required to quote a 4-part tariff, fixed components for RE and non-RE power respectively, and variable components for fuel and transportation cost of non-RE power. Successful bidders cannot exceed 2% over L1 tariff. Commissioning timeline is set at 24 and 30 months for project sizes below and above 1000 megawatt respectively. SECI has allocated only 250 megawatt in its RTC Tranche 2 2,500 megawatt tender in October 2021 as the winning bidders refused to match the L1 rate. This unallocated capacity has now been reissued under the new tender. GUVNL has issued a 600 megawatt solar tender along with a 100% green shoe option. Commissioning timeline is specified at 15 months and bid sizes range from 100 to 600 megawatt. Minimum CUF must be 17%. The state has led tender issuances this year. As on 2022 September, it accounts for an impressive 20% of total issuance and 28% of total allocation. MSEDCL has issued a tender to develop 500 megawatt solar capacity in Maharashtra. Bid sizes can range from 25 to 500 megawatt and minimum CUF required is 19%. Commissioning timeline is set at 15 months for solar park projects and 18 months for non-solar park projects. Bid submission date for the tender is 9 November 2022. Punjab has invited bids to develop a 54 megawatt solar park project under Component C of the KUSUM scheme. Component C pertains to solarization of grid-connected and feeder-level irrigation pumps. Minimum CUF requirement is 19%. Bid sizes can be between 1 to 54 megawatt and bid submission timeline is set at 20th October 2022. Now let us look at key new EPC tenders. SJVN issued a tender to develop 70 megawatt solar projects in 3 different locations across Himachal Pradesh. Bid submission date is 1st November. GSECL Gujarat issued 3 solar EPC tenders for 11, 12 and 18 megawatt respectively. The commissioning timeline for all tenders is 12 months and bid submission is 7th October. Indore Municipal Corporation has issued an EPC sub-tender for a 60 megawatt solar project. This is part of a 100 megawatt capacity it won under SECI Pan India Solar PSU Tranche 2 1500 megawatt tender. Bid submission date is 28 October with 15 months as the commissioning timeline. PESL, a subsidiary of Power Grid, has issued an EPC sub-tender for a 200 megawatt 400 megawatt hour storage project. This has been issued in anticipation of its participation in the GUVNL Gujarat 500 megawatt 1000 megawatt hour standalone storage tender issued last month. Now let us look at key rooftop solar tenders for this month. SECI issued a 50 megawatt OPEX tender for projects to be commissioned on various government buildings across multiple states. The states and the union territories are segregated into 4 zones with maximum bid capacity specified for each zone. Ceiling tariffs for Zone 1, 2 and 3 is set at 5.5 rupees per kilowatt hour and for Zone 4 at 6.25 rupees per kilowatt hour. Commissioning timeline is set at 9 months. Telangana State Renewable Energy Development Corporation, on behalf of Hyderabad Growth Corridor Limited, has issued a 16 megawatt OPEX tender. The project will be split across 2 locations with capacities of 12 megawatt and 4 megawatt in each location and with 1 megawatt each under net metering arrangement. The commissioning timeline is set at 4 months and bid submission date is 30th September. UP-NEDA has issued a tender for an aggregate capacity of 42 megawatt to be installed in various government buildings across Uttar Pradesh under OPEX model with net metering or net billing arrangement. Commissioning timeline is set at 12 months. Now we move on to auction results. Results were announced for a 750 megawatt solar wind hybrid tender issued by Rewa Ultra Mega Solar or RUMS in Madhya Pradesh. The tender was oversubscribed by 1.6 times. Winners include Spring, Tata, Renew and O2 with bids in the range of Rs 3.03 to 3.04 per kilowatt hour. Solar component of the project should be 33 to 36% of contracted capacity. This is the first hybrid tender announced by the state. RUMS also announced results for a 300 megawatt floating solar project earlier this year and another 300 megawatt floating solar tender is pending allocation. MECDCL completed auction for a 500 megawatt pan-India solar ISTS tender, which was oversubscribed by 2.2 times. Winners were NTPC and Avada at tariffs of Rs 2.82 and 2.83 per kilowatt hour respectively. GUVNL announced the results of its 750 megawatt Tranche 16 solar tender. The tender was oversubscribed by 1.5 times. And winners were Blue Pine, NG, Tata and UPC with winning bids ranging between 2.49 and 2.66 rupees per unit. An additional capacity of 750 megawatt may be awarded to the successful bidders under Greenshoe option at L1 rate. These tariffs are 8 to 15% higher compared to the previous auction by the state in June 2022. It is worth noting the 8% tariff discount over Maharashtra's 500 megawatt tender discussed previously. Now moving on to EPC tender results. GSECL awarded a 14 megawatt solar EPC project to Prozil Infra at a contract value of 822 million rupees. Commissioning timeline for the project is 12 months. There were 2 EPC sub-tenders awarded in this month. SJVN awarded a 100 megawatt lump sum solar contract to be set up in Gujarat to Tata Power at a value of 6.12 billion rupees. SJVN had won this project under GUVNL's Tranche 10 solar auction at a tariff of Rs 2.64 per unit. NHTC has awarded the contract for an 88 megawatts floating solar project at Omkareshwar Reservoir in Madhya Pradesh to Tata Power at a contract value of 5.96 billion rupees. NHTC won this project in RUMS floating solar 300 megawatt auction at a tariff of 3.22 rupees per unit. This concludes the summary of key tender updates from August 2022. The last 2 quarters saw tendering activity pick up substantially with a total of 20.5 gigawatt new tenders. We expect issuances to slow down for the rest of the year, but auctioning activity is likely to pick up. This concludes the summary of key tender updates for September 2022.
Let's discuss major policy and regulatory updates. We start with updates from the central government and move on to updates from the state government. MNRE issues guidelines for Tranche 2 of Module PLI scheme. The Tranche 2 has a total budget of 195 billion rupees over a period of 5 years. The budget is split in three categories based on backward integration. 120 billion rupees for polysilicon to module manufacturing, 45 billion rupees for wafers to module manufacturing, and 30 billion rupees for cell to module manufacturing. The PLI rate has been reduced sharply from 2.25 to 3.75 rupees per watt peak in the first tranche to a maximum of 2.2 rupees per watt peak. But actual payment would depend on a host of factors, including local value addition, module efficiency, and thermal coefficient parameters. Companies shall be selected through a bidding process issued by SECI based on three criteria in decreasing order of importance: module efficiency, local value addition, and manufacturing capacity. Bid size would range from 1 to 10 gigawatt, including capacity awarded in Tranche 1. In case a manufacturer fails to meet the quoted efficiency and local value addition parameters but meets the minimum scheme requirements, the PLI amount would be reduced by 25% for the respective year. However, if the minimum scheme requirements are not met, the manufacturer will receive no PLI payment. Subsidy shall be paid annually for only 50% of awarded capacity, with actual payment amount to be tapered down over 5 years. We estimate effective subsidy amount at only about 2.5 to 5% of expected revenues, which seems insignificant in the context of strict bidding requirements and associated risk of penalties. On the other hand, we wonder why any subsidy is necessary when there is a massive tariff barrier in the form of 25 to 40% BCD against all imports. We believe that the PLI would potentially restrict competition and delay adoption of new technologies. MNRE clarifies criteria for change in law compensation. Projects awarded by SECI, NTPC, and NHPC, where bids were submitted before an announcement of BCD implementation and GST rate hike, shall be eligible for change in law compensation subject to PPA provisions. This is just a clarification notice, as it was always understood that BCD and GST would qualify for CIL compensation subject to PPA provisions. However, there is still some ambiguity about these provisions for projects awarded under state tenders. MNRE reduces part commissioning capacity of solar projects to 10 megawatt. On behest of project developers, the limit has been cut down from 50 megawatt to 10 megawatt for projects commissioned until 31st March 2023. Allowing part commissioning of smaller capacities will help reduce construction risk and maximize interim revenues. APTEL has directed CERC to allow O&M and carrying costs to be included in change in law compensation. APTEL has issued an order directing the central regulator to allow GST on O&M and carrying costs to be included in change in law compensation. Both self and third-party O&M will be eligible. The order is expected to be a major relief for developers previously denied compensation by CERC. APTEL has correctly taken the view that project developers should be protected from any adverse change in costs arising from any permitted change in law event. This concludes updates from the central government. Let's discuss state policy updates. Andhra Pradesh announces RPO trajectory until financial year 2027. The RPO target is set to increase from 18% in financial year 2023 going up to 24% in financial year 2027. The target does not surprisingly have any technology sub-targets in contrast to previous targets or Ministry of Power guidance. It is discouraging that Andhra Pradesh did not adopt the Ministry of Power specified trajectory of 35.95% by financial year 2027. We estimate actual compliance at 19.4% and 22.03% in financial year 2021 and financial year 2022 respectively. Karnataka proposes alternate routes for meeting RPO targets. Karnataka has issued a draft amendment to its RPO regulations introducing alternate routes for RPO compliance in line with Ministry of Power recommendations. It is proposed that CNI consumers would be able to meet their RPO targets by procuring renewable power through green tariffs from RPO compliant discoms, by procuring power from storage systems utilizing renewable power, and buying green hydrogen or green ammonia. These are sensible changes brought in line with evolving technology and market landscape. Madhya Pradesh proposes RPO trajectory in line with Ministry of Power recommendation. Total RPO target has been set at 43.33% by financial year 2030, split between hydro, wind, and other renewable power technologies. Hydro target has been set at 2.82% and may be met by procurement from projects commissioned after 8 March 2019. Wind target of 6.94% can be met by procurement from projects commissioned after 31 March 2022. Target for other renewables is set at 33.57%, which may be met by procurement from other hydro, wind, solar, and bioenergy projects. Obligated entities are also required to procure 4% of their power demand from energy storage projects charged using at least 85% of power from renewable sources. It is refreshing to see Madhya Pradesh swiftly adopt the Ministry of Power recommended trajectory. But the targets are overly ambitious considering the state's history of non-compliance. Renewable power procurement by state discoms was only 10.85% against the target of 14.5% in financial year 2021. Madhya Pradesh proposes green open access regulations. Madhya Pradesh has issued a draft amendment incorporating Ministry of Power open access recommendations. Key provisions include eligibility for consumers with sanction load of 100 kilowatt or more, complete waiver of additional surcharge subject to payment of demand charges for 100% of contracted load, limit on cross-subsidy surcharge increase to up to 50% over 12 years, and restrictions on revision of procurement schedule. Madhya Pradesh is the third state after West Bengal and Karnataka to adopt Ministry of Power recommendation for green open access since their approval in June 2022. The changes, if implemented, are expected to liberalize the open access market and stimulate capacity addition. Tamil Nadu and Rajasthan issue retail tariffs for financial year 2023. Tamil Nadu has issued its first retail tariff order in 5 years, increasing grid tariffs by 6 to 66% across consumer categories. The state has also introduced an option for HT consumers to avail green tariffs at a premium of 10% over variable grid charge. Meanwhile, in Rajasthan, grid tariffs shall be unchanged. The state regulator has also advised the state government to notify a policy requiring solar projects supplying power outside Rajasthan to supply 10% of such power free to discoms. Increase in grid tariffs is expected to improve TANGEDCO's financial condition but would help to make open access more attractive. In Rajasthan, the requirement to supply 10% of solar power to the state, if approved, will be a big blow for interstate solar projects, which are already required to pay a development fee of 0.2 million per megawatt per annum. This concludes key updates from Indian renewable power market from September 2022. We hope you found this update useful. You can view all tender, policy, and regulatory information on the renewable power sector in real time at India RE Navigator, a one-stop market intelligence portal for the renewable sector. You can also write to us at contact@bridgetoindia.com if you have any query or feedback. We would love to hear back from you. We will be back next month with another update. Until then, goodbye and take care.